Hey everybody, Jimmy here. Welcome back to the channel. Welcome to May. Today's a green day for me, starting the month off right. I want to talk candlesticks today. I want to show you my entries and exits on 2 green trades that I took. Hope you guys had a green day. Let's jump into it. Welcome. So I've got some charts up here and let's dive into these trades. Let's break them down a little bit and then let's talk about candlesticks. Let's talk about how they develop, what they look like, and what they can tell you, because each candlestick sort of tells a story. So we'll get into that a little bit later. But first off, I want to start off with the first trade I took today, and this was on a company called Arconic. So today I ended up taking 2 trades on 2 stocks that I have actually never traded before. So it was sort of a branching out day for me. Let me turn on my trades real quick. Let's show those. So you can see right here that Arconic opened up today, ticker ARNC, opened up really strong today. And then as it started to pull back, I was watching my 9 daily SMA line that I always like to watch. And I was watching for a crossover because I had noticed, if you look down here on the RSI, this stock had become pretty overbought. So I thought, if it gives me a nice strong candle below or crossing the 9 SMA, I would consider a short position. And so I watched it cross right here. The ATR on it was 8 cents, so I was going to set a take profit at about 1.25 to 1 risk to reward on that 8 cents. So my stop was 8 cents, my risk to reward, my take profit was going to be right around 10 cents. So you can see as this crossed, if I drag up the volume a little bit here, you cross here, you can see this volume stick came in, and look how much bigger it is than the one before it. So that's my trading signal that tells me I've got a few sellers with me. There could be a little bit of momentum. This might be worth taking a short position. So when this candle opened, I went short. I got a quick 10 cents and I was out. So it was a nice quick little $66 and change trade to the short side this morning. And then I watched it a little bit later and it kind of flattened out. It did cross below again, but it wasn't convincing. It just was sort of flat. So I left it alone for the rest of the day. And then the other trade that I took was over here on Hilton Worldwide. Another trade or another stock I've never traded before. Same thing happened today. We got this push up. We had a little overbought action here on the RSI above 70. So it pulled back and I was just watching it. I was figuring that it was just going to push higher, but I ended up getting the crossing candle, which had me a little excited. So I looked down here. You can see I got an increase in volume that was quite a bit more than the candle before it. So once that happened, I started watching for the open of the next candle, got it, took it short, and on this one, the ATR was 56 cents. And what had happened here is it did go the full amount to get the 1-to-1 risk to reward win, but it tapped that and pulled back, and this doji started setting up, and it just made me a little bit nervous. So last second, I just decided to cover my position, took a $16.27 win, and then you can see it pushed back up. So it's actually one of the first times I've ever flattened a trade early and had it been right. I think the read was correct. It just was not, it wasn't giving me the follow through. And when this doji was setting up, you can see that the volume was coming in. So that also made me a little uncomfortable. Now, if this candle would have been red and pushing down slightly with that much volume, I'd have stayed in. It would have been a great indicator that we were possibly going to go lower. But because it was green, because it was a doji, I got a little anxious, a little nervous, and decided to jump out. So I closed that position. And that was really my day. I did miss one. I want to show you this because it's painful on Facebook. I was watching Facebook, and I flipped my chart to do something else, and when I flipped back, I completely missed a beautiful entry, and I marked it, and you know what? It wasn't Facebook. I apologize. It was Apple. So I was watching Apple all morning because it had been overextended right in here. And overbought. So I'm just watching it. It's grinding. I figure Apple's probably just going to grind the rest of the day. But I kept checking in on it. And then I noticed that it pushed down and then came back, but barely set a new high. Really couldn't go higher and then started to settle in. I thought, okay, if we get a push to the downside with a strong candle, I could go short. And here it was. Got the push down, got the increased volume to the sell side. This candle opened, we started to push down. I flipped my chart back over and saw it when it was about 20 cents to the downside on this entry candle. I decided not to chase it. I could have jumped in there and it still would have worked out, but I didn't want to risk getting bounced back out. So I just went ahead and closed my day. I think, it was just an unfortunate that I missed that. So another day. But anyway, I want to get into talking a little bit about candlesticks now. Because if we take this for example, so right here, this is actually a really good example, and I'm going to put a circle around it. Right here. If you look at that, and let me zoom in just a little bit. So this is a great example to talk about candlesticks and the story that they tell. As you know, a candlestick has an open price, a close price, it has a high and a low, and this creates the structure of the candlestick. When I'm looking for a cross, or if you're any strategy that you're trading, say you have a line that you watch, and if it gets crossed, you want to enter. This candle opened above the line, above my SMA, and it closed below. So you might ask, why didn't you take that as an entry? Because if you look down here, there's some volume. So I did get increased volume. I did get a cross. But here's the thing you really have to watch. When you get a candlestick that pushes way down, and then as it gets ready to close, the volume is increasing, and the bottom close price that hasn't yet realized starts creeping back up, and you get a smaller candle close, this bottom wick shows a little bit of buying pressure. Now, this is a confusing topic because you see this red volume bar, and you can't just take it at face value. You can't just say it's a red volume bar, that means it's all selling pressure. All the red volume bar means is that the candle is red. If volume's coming in and the price is moving up, say this was way down here and there was tons of volume and it was red and it looked really good, and then right as the candle was getting ready to close, it pushed all the way back up and there was a ton of volume, but you ended up getting like a hammer doji. You started getting a long wick on the bottom, and you're still technically below the green line, below your crossing line. You have to be careful because the underlying truth is buyers have come in, they are the volume. They increase the volume on that candle, and your candle is telling you that story. Now, if you come over here, this candle here, this close price was in the bottom 25% of the price action on this one candle. So the story on that candle says we pushed below, we got good volume, and I'm pretty confident that most of this volume is selling volume because we stayed below and we didn't start to migrate back up. You weren't feeling buying pressure come back in. So anytime you're seeing a red candle with good volume starting to get more volume, but it's gaining a longer bottom wick, you got to be really careful about that because those are buyers that are pushing that unrealized closing price up higher. Now the same goes if you flip it on its head. If you see a candle that pushes way up and then say at the last second lots of volume came in, but this started to push back down and it closed maybe right in here, and you had a long topping wick, that would be selling pressure pushing back down. So that tells you that sellers are possibly present. So when I'm watching for crosses of EMAs and things like that, I'm looking for a solid candle. You know, really, candles like these are beautiful candles right here. That shows a lot of selling pressure. Now you can see this one didn't go any lower, So that would have been, you would have got bounced out of that one. But the story that this candle's telling is very different than the story that, say, this candle's telling. So this one crossed down as well, but you can see volume is here. It's not high enough, but say it were higher, and then the closing price started to push back up, and now you're getting this sort of doji-esque looking candle with a long lower wick. That means that the buyers came in and pushed that back up. So the volume is not accurate for what you're looking for. Volume is misleading you because the volume is the buyer based on the story that the candle's telling you. So I hope that kind of makes sense. If you have questions, leave them below. Leave comments below if you have questions about this. But you can just get a really good idea of what is happening based on the story that the candle's telling you. So, for example, if I zoom in on this one, this candle here pushed down, but look at this little tiny baby wick here. So I got increased volume with a very small lower wick. So I was comfortable taking that. Now, if this had been a longer wick, like really long, and this body was even smaller, it had pushed up even tighter to that green SMA line, I would have been very uncomfortable with it because I would have known, okay, this volume is coming in because buyers are pushing it back up last minute. So anytime you can see, if you're looking for a short position, anytime you can see a taller upper wick and no bottom wick, that's a very bearish sign. That's a very short bias sign and would maybe signal you into a trade or give you the confirmation that you need to be able to take a trade. So that's kind of the breakdown of candles and just a little bit about the story that they tell. You look at this one here. If you saw that one, say this wasn't green, say it was red. This tiny little body was red, and you saw this huge wick, this huge volume bar. Some might say, oh, look at all that selling pressure because it's red. Well, technically it is red because the candle's red, but it could be the case where 2 pennies more to the upside turns this candle green. This candle could have been red if this price would have been a few pennies lower. And that's all the difference. So you just got to really understand what the candle's telling you. Is there a taller upper wick or a taller lower wick? Sometimes they also call them shadows, upper and lower shadows. You really got to watch those, understand the story that the candlestick's telling you, and then from there take your entry. So that's what I was trying to do today and had a couple successful wins. So hope that works for you. I hope that makes sense a little bit. If you have questions, let me know. Hope you guys had a green day today. Hope you have a great night tonight. We'll be back at it tomorrow. Thank you for stopping by. If you're new, hit that subscribe button. Give it a try. If you like this video, give me the thumbs up. Thanks for stopping by.